A report for October will be released next Friday. If we see the first increase in temp hirings in almost 2 years, it could signal that non-farm payrolls are not far behind. Jonathan Basile, an economist with Credit Suisse, has been tracking the correlation between those numbers. He joins us right now from his firm in New York with more. So, Jonathan, talk to us about this correlation, why it's such an important one to watch.
Thanks, Carol. This correlation between temps and non-farm payrolls, it's important because temps are a leading indicator, a reliable leading indicator of payroll employment. I mean, we've seen in the past peaks and troughs, and temps lead peaks and troughs in payrolls in past cycles, and in particular in the last trough in payrolls back in '03, temps led by 4 months before we saw a turn in overall payroll employment.
So it's not a sign, because we were talking with Joe Saluzzi just before this. I know you were listening in. If you're seeing workers, employers hire more temp workers, that's not a bad sign. It's not a sign of a lack of a commitment to actually hire full-time workers.
No, it's not a lack of a commitment, but it's a different kind of commitment. I mean, you realize we have two types of workers. You either work on a temporary basis, which is kind of a closed-end contract, or you work on a permanent basis, which is an open-end contract. A lot of people think you have a job, it's a permanent job, but these temps are, it allows for more flexible hiring, and in particular, it allows for companies to dip their toes in the labor pool once they want to restaff, rehire, and re-up for the recovery.
Well, it shows that they've already stretched their existing staff as much as they possibly can, right? So they've got to go out and hire temps. And what you're saying is, we just showed a chart, by the way, showing the rehiring of temporary workers, and that it's a leading indicator here. You're saying that this really points that their next step as a corporation is to rehire full-time workers.
That's right. That's correct. I mean, what's important about the whole temp idea is that companies are seeing that their activity is starting to stabilize, and maybe is coming in above expectations. And in a service economy, services aren't really the most productive types of industries. So you need people to generate output. You need people to generate revenue to expand your business. And hiring on a temporary basis is it's kind of a baby step. We've had 21 months of job loss in terms of total payrolls, and a gain in temps would show that there's a transition from the cost cutting to at least a little bit of rehiring back and a little bit of taking a little more risk.
No, let me ask you, Jonathan. So then, when it comes to temp workers, I mean, what kind of data flow have we been seeing as of late, or what kind of indications are you seeing?
Well, the data flow, it comes specifically from the American Staffing Association. This is an organization that's been in place for a number of years. But recently, they've come out with a weekly, it's called the ASA Staffing Index, and it tracks the data that comes from the BLS. It tracks the temp data that comes from the BLS very well. They put out weekly comments. They also put out monthly reports for the week that corresponds to the payroll survey. And we found that it's a significant indicator when you want to try to project what's going to happen in temps. And that's why we put the report out.
What about when you try and project what's going to happen with non-farm payrolls? I mean, when do you expect us to see a turnaround?
Turn of payrolls, we think, could come around the turn of the year. We have a topping out in the unemployment rate in the first quarter of next year at 10.2%. We think we won't really see sustained gains in payrolls until we get into the first half of next year. But to be honest, I wouldn't be surprised if we got a surprise gain in payrolls before the year's out. But right now, that's kind of where we're handicapping things.
But just for some perspective, Jonathan, I mean, I think in your note too, you say, any upturn in temp employment would fit into the category we've been calling doing better, but not what you would call doing well.
Oh, that's true, because we've lost nearly 1 million temp jobs, just temp jobs, since the peak back in '06. Now, for the overall economy, payrolls were down 7.2 million. So the level is very low relative to where we were at the top. So even if you start to see a turnaround, that's a big hole to climb out of. That's the whole idea, that the turnaround is doing better. The level where you're at is that you're not doing well yet.
But still a good first step.
It would be a good first step, and that's what we're anticipating.
Why do we, Jonathan, see average hours worked, I should say, still at an all-time low. I mean, wouldn't you expect a company to try and boost that before it starts to bring in temp workers?
Well, that's true. Hours are an indication, an initial indication first, that you're likely to expand your activity. You're likely to start to generate more output. What we've seen lately, in particular last month, we saw some disappointment with total hours going down on the month. But at the same time, we're not seeing the same sort of cuts in hours like we did at the depths of this employment recession. And that's also an indication, because within that non-farm work week, the manufacturing work week has bottomed out. And the manufacturing work week is the one that's the leading indicator, not the total work week.
All right, so net, Jonathan, when it comes to the labor market, I mean, this is, again, something that Joe Saluzzi was pointing at. You know, there's still an awful lot of people out of work. I mean, where's consumer spending going to come from if you still have a lot of unemployed people? Net, when you look at this, you look at the temp workers and maybe your expectations here. I mean, where are we in terms of the employment picture? Things are starting to get better in your view, or not quite yet?
It's really at the beginning phase of getting better. That's our expectation. It's not at a phase where we're, where people are hearing that we're getting job growth and their expectations about jobs and income are improving. I mean, just look at the consumer confidence report we got this week, a fallback. I mean, in that one, the unemployment rate continued to, that news is one of the reasons why people still remain worried. And until we clear up that picture, in particular on jobs and income expectations, more importantly, the view about consumer spending is still going to be unclear. But when the news comes, that's going to be a powerful force.
Right. We'll get more news just about a week from this Friday. All right, Jonathan, thank you. Jonathan Basile of Credit Suisse. When we come